Hey guys and girls, Nathan here, not from the Be Invested headquarters, just down by the lake at the moment. Not in the office, just due to the fact that setting up a new office, absolute mess, sheets everywhere, gyprock going in, walls going in, offices going in, all that sort of stuff. So I thought we'd go outdoors today. Next batch of videos I'll be doing in the office and show you around for a bit of a tour. Answering lots of questions from the community, so keep them coming through. Whatever you feel that's holding you back, whatever you feel that I can help you with, whatever is that burning desire question. I want to be available, more open to you guys to be able to ask through transparency and be able to help you guide through whatever your challenges are. Today, I just want to talk a little bit about what's happening out in the property market. Where are we heading for the rest of 2019? Where are we heading for 2020 and beyond? So I've talked a lot about technical stuff, talked a lot about the GFD, interest rates coming down, all that sort of stuff. And today I'm going to keep it very simple. I'm not going to go into, this is what's going to happen with the economy and go into technical stuff. If you do want to see my views on that, I talked about a lot on Birchfeed. Every day I'll put information out there, birchfeed.com, go and check it out. Give it a trial, check it out, the data, same content where I'm getting my own research from. But in essence, I said 2 years beforehand that we're going to see the GFD. People laughed at me 2 years ago. I said we'd see a hyperinflation. It was probably 5 years before, 7 years before that would happen. I said we'd see interest rates go to zero. People laughed at me. A lot of people in the community, they were laughing like those birds in the background. But a lot of people were saying, ha 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 ha, Nathan's an idiot. People messaging through, thinking that Nathan does drugs and he's off his head. But I don't do drugs and I'm not off my head. I'm just telling you facts from the boring research that I do out there. But we've got interest rates falling, down 0.5% already to the day of the 4th of June and the second one in July. We're not going to see one in August, I don't believe. Maybe see one in September, but I know we're going to see the next one in October. Interest rates are on their way to zero. What's happening out there in the property market though? How's it reverting into, is prices falling? Are they going to keep falling? Are they rising? Are they going to keep rising? Should I trust the real estate industry? Should I trust the news? Where do I turn to? It's not in my interest to tell everybody things are bad. I told you it was bad before it's bad, right? It's not in my interest. I should be going, yeah, property, great, go buy property. It's going up, it's always going to go up. But it's not always going to go up. And I think it's important that, you guys educate yourself to have your own knowledge, to become your own, financial advisor, to become your own expert, to be able to, get your own results and be able to replicate what I do. So, looking at the market, all the real estate agents are like, yeah, we won the election, interest rates coming down, APRA this and blah, blah. Reality of it is that they're just hyping up shit to try and sell stuff at open home and at auctions and whatnot. I love this market for a very different reason. I love the market because the market has tanked. I like buying on the eastern seaboard, Queensland, Sydney, Melbourne not so much, but I would buy there. I'm about to buy my first property in Melbourne shortly, an office for our offices as part of the Be Invested group. However, specifically if we look at Sydney, that market's been smashed, right? I'm picking up properties for 250 grand that were selling for 350, 380, even 400,000 going back 2 years ago. I like that. I'd rather be buying them at that than what they were before. I'm picking up properties which, people are just too scared. Like, I'm using the news, I'm using the market out there for my benefit. Queensland, the market there hasn't fallen off a cliff. There's some areas which are very investor-centric, which have been suppressed on price, but the market's holding up very strong in Queensland, especially around the Gold Coast area, the owner-occupier area. Some of those areas are still going up. So you can't look at one market and go, everything's stuffed. Some mining towns on the way up. Reason being is that there's a lot of pressure from how the economy works for commodity prices to go up, which means it's more profitable to pull stuff out of the ground. So there could be some growth there, but I don't speculate on mining town areas. Looking at Sydney, Rents have been affected dramatically at the moment, which is hurting yields. But I think once we see a turnaround, if you're picking up properties in Sydney for $250, they used to rent for $320, $330, they're going to be neutral cash flow. When was the last time you could find a neutral cash flow property? Interest rates going down, push up the profits. Opportunities are out there. I am starting to see a bit of a turnaround in price, and I was having a chat this week with my team about the market. I don't want the market to go up. I want the prices to fall, guys. I have more to lose than anybody out there if prices fall, because obviously it's going to affect my holdings, my assets and whatnot. But it doesn't bother me. I don't eat the bricks of my house as a meal, right? I don't live off my equity, right? It's just a paper trade. I'm about building wealth, preserving wealth and creating cash flow. I don't like the fact that rents are on the decline. That's annoying for me. Last time I saw this was when I first started my career. I quit school in 2002. My first job was working in real estate, in rentals. And yeah, that was where I learned about, what rents are happening in there. I never saw a market like that. It was like 2003, Sydney market, properties were vacant for 6 months, 6 weeks, 8 weeks, 6 months in total sometimes. Give away a free week's rent, no one would turn up, whatever. We're not that bad in this market at the moment, but things have been certainly depressed, and the people that are proactive and market their property correctly and are positioning their price correctly are getting their properties rented. It may be 12 months, maybe 24 months. What I did see after this soft period back in the day, which was very evident of pre-GFC, is that rents went up from about 2007 to about 2009 in the GFC. So if we have a GFD here, which I think we're on track for, we're going to see rents rise, and that won't just go up back to where they were. There's a good potential that they will go up and, $50, $100, $80, $120 a week on average, which throughout a portfolio is going to be really, really awesome. So for rents, really soft at the moment. Returns, really soft at the moment. As for the property prices, I do feel a bit of a turnaround. I'm not speculating prices are going to rise. I don't think that we're going to see price rises and go, real estate agents, other investors out there, whatever, they're all going to speculate, oh, things are great, everything's all right again. But no one's actually addressed the fact of what caused this market, which I have addressed extensively throughout the community, throughout my my mentoring and my coaching that I do with my inner circle mentoring clients. I've talked a lot about what's causing this, how we can get around it, what will be the signs and all that sort of stuff. But at the moment, I think we're seeing a bottom, and I called that on the 4th of June when I did my Facebook Live about the interest rates coming down, is that we're at the bottom of the market. I don't think we're going to see stuff go lower. I'd love to see the bottom end of the market go lower, because it means that I can pick up more assets cheaper while scared people are out there running around offloading their precious assets. Am I optimistic about the market? I called 3 years ago that I wasn't optimistic. I called that I was pessimistic on the market. I saw negative outlooks on a lot of aspects, and it all came to liquidity issues out there in the marketplace, and we're starting to see some of those things get rectified. I think there's a lot of room to grow. I think over the course of the next 12 to 24 months, we're going to see a lot of stimulus come into the property market, whether it be from quantitative easing, whether it be the central banks dropping interest rates, whether it be from the government introducing new regimes to, schemes and whatever to improve productivity out in the marketplace, whether it be from tax deductions, the ATO trying to, lower tax rates and whatnot and give stimulus, like we just saw, like the 1,080 or whatever it is that everyone got, or 1,040 that everyone got as tax breaks. We're going to see a lot of this stuff come to the marketplace. It's not going to be until we see the effects of that property prices are going to rise. But if someone was to be building their portfolio today, now would be the time. I have not said this throughout the last 3 years, 4 years, but at this point in this market, if you've got the ability to buy property and you're not buying property, you're going to regret it in the future. This is the bottom of the market. This is an opportunity. If you can spend the next 12, 24, 36 months building a solid asset base, we're going to see the market turn around. Around that period of time, property prices rise, you're going to be well stocked up, you're going to be in a position where you could possibly retire. that is my views on the property market. There's opportunities out there. I've never been so confident of the opportunities that are out there. I'm a bit upset that I'm not seeing prices fall any further. Are we going to see 40% house prices loss? No, we're not. I said that before. I said that I think that we'll stop around the 20%, and we are there. So, yeah, will we see the prices double in the next 6 months? No, not in my opinion. I could be wrong, but I don't believe I am. But I think in the course of the next 24, 36 months, after a great deal of stimulus, what you've got to remember is at this point, in 12, 24, 36 months time, interest rates will be zero, possibly negative 1, 2 or 3%. And there'll be a lot of momentum happening out there and velocity. There's a reason why they call money currency, because it needs momentum to make it effective. So on that note, guys, hopefully that property update wasn't too far-fetched with some technical stuff in there. But yeah, we'll catch up soon. Any questions that you got, feel free to chuck us an email, admin@beinvested.com.au, write a message in the box below, or call us in the office 1300 367 925, and make sure that you smash up that like button and share it with your friends if you like it. We'll catch up soon. Have a great day. Bye for now.